Well, good morning, everyone. Welcome to our Friday morning trading session. The markets just opened up with a big gap lower. I think overall they're still more or less trapped within the sideways range that seems to have contained the market for the last month or two. But here we are with a substantial overnight session. Very smooth progression as well. Toward yesterday's close, we developed this green bar sell, and all through the Asian and European session, the NASDAQ just trickling lower. So it closed around 4,800, give or take, and opens around 47.65. We've got a great big opening gap. It will be interesting to see whether or not the market tries to get into that gap this morning. Or if it's what's known as an acceleration gap. Where the market just keeps on going in the direction of the breakout. Normally, though, we anticipate the market to try to fill that gap. Maybe not immediately, but certainly sometime during the course of the morning. So no real signals just yet here on the NASDAQ. We're kind of bouncing around a little bit. Crude oil also, well, crude oil may be getting a little bit more bullish. Here's crude oil now on the hawk. And we've got, again, a market that's fallen off during the overnight. A little bit of a retrace here. Green bar sell signal. Now, we know these signals tend to develop toward the end of a trend. Remember, before you do anything counter trend, you always have to have a trend preceding it. And I think this certainly qualifies. So we do have a green bar sell signal, which, of course, the green bar sell is the type of signal that you can take with trend, in which case you just realized your scalp target, or you can plan to buy the failure of the green bar sell. Now, ideally, the stop should go down there, and here's the problem with crude oil. It's trying to cover a trade that far away. We are getting a little intermediate swing, and actually a red bar buy signal, which tends to be a little bit more bullish. The safer entry is still above the high, and I suppose you could try to cover it down here for a quick little scalp. Now, this is not too difficult, or should not be too difficult, for a market like crude to achieve. 10 ticks, that's nothing. If you wanted, you could try to run it out and just see if perhaps crude was going to get into filling that opening range gap that's above the market as well. Now remember, when you're taking a trade like this, you're pretty much throwing those $300 away, right? That's the attitude you should have. You shouldn't be overly attached to your risk amount, because it is risk capital. But there you go. There's a possible trade on crude oil. Crude oil, of course, the market opening at 6 a.m. Pacific, 9 a.m. Eastern, so they've been trading for a little while already. just allow the market a few minutes here to get its bearings. You can walk. We're beginning to introduce yellow bars, which is a sign of neutrality. Soybeans, well, soybeans kind of stuck. Your soybeans on the eagle. Good session yesterday. Nice, smooth rally higher. And, oh, no, sorry, that was the day before. This was yesterday's session, a little bit more conflicted yesterday. Yeah, that makes more sense because I was thinking, did soybeans really rally yesterday? No, I didn't remember that. Okay, so the market a little more conflicted yesterday. You can see here on the eagle, our band starting to twist up like a rope. Also an indication of neutrality and perhaps a lack of follow through. All right, here's a possible trade now on the Raptor and the Falcon. We've got a soft edge buy signal. Now what I'll do is I'll buy just above this signal, just above the high of this current bar. And you're going to see we have the same signal developing here on the Falcon. Our trend change signal here on the Falcon, the trend changed color. This is essentially the first signal where everything is complete. We're right up against this secondary support line. And of course, we do have a strong downtrend. So it's a little bit dicey trying to buy into such a strong trend. You should always consider the context of what you're doing. Oh, by the way, this is also a late filter entry signal. The late filter entry occurs when the filter goes out of sync and comes back into sync. However, the trend line itself never changes color. All right, so that signal has gone live. Let's go here, check out the Raptor. I've got to get a stop and play here. And what I've done is oops, there we go. I've simply taken a single here on the Raptor. I could have done the same thing with the Falcon, just take a single contract. And I've left it open. I've just left it as a runner. This is one of those let's dip our toe in the water kind of trades and see what's going on. Sometimes you end up having to do that. Of course, we're near the end of the trading range, or where the market seems to have established a trading range. Oops, I don't want to roll my stop just yet. And how are we doing with the Falcon? Same thing, we're kind of struggling a little bit. Also producing a first micro macro cross signal here to buy. The signal's going to print right here. You'd probably be a little better off taking it above this little swing high here. So across the board, we seem to be getting a little bit more bullish on the NASDAQ. We can close out our crude oil trade. So here's crude on the hawk. Never did give us that failure. So we're back down here now, retesting the lows, so we can cancel that trade entirely. All right, so we're about to hit our break even. We've already hit our break even here on the hawk. I could perhaps roll the break even a little bit more there on the falcon. Ah, darn it. They just looked back enough to tag my break even stop out. It'll be interesting to see what they try to do here. At the moment, it seems as though they are going to try to get into that opening range gap, or pardon me, that overnight gap. While we're waiting for this, and I see Daniel's in the room, Daniel asked me a question yesterday via email. Daniel was asking, Eric, sometimes in your webinars you talk about the market momentum. Do you have some indicator to show that value? No, not really, other than the price itself. You see, the nice thing about day trading is that you can watch the market unfold. Right? So right now, we're bullish, but does there seem to be a lot of bullish momentum? No, not really, because it's taking a very long time to produce these bars. Now, if we see a breakout higher, and all of a sudden the bars start printing relatively quickly, well, then we know there's a lot more bullish momentum. Now, there are indicators that you can use, of course. Let's see, we don't have a trade here. Nice thing about DTS is that you can always pair it with another indicator. However, you really only want to do that if it's going to help you make a decision. Momentum, of course, is the simplest of the momentum indicators. And maybe we'll change that to a bar, make it a little bit easier to understand. So the idea behind the momentum indicator is that when you're above the zero line, momentum is bullish. When you're below the zero line, momentum tends to be a little bit more bearish. So you can see here when we were producing some of these signals, like here's a first micro macro cross lower. This signal prints and you seem to have a fair amount of bearish momentum. And then of course, you had quite the follow through there as well. Now, you know, you can certainly follow that. If you find that it helps you make a decision, by all means, keep it on your chart. But if you find that you're ignoring signals, like now we're getting a macro pullback signal. So let's throw a macro pullback in here just for demonstration purposes. Okay, now when that macro pullback was developing, I don't think at the moment the momentum was kind of bearish, right? And yet it's a high probability bullish signal. Oh, actually, it changed on me. Stinker. It was a macro pullback and then changed, but I still believe we're going to see some upside momentum here, or an upside move. But no, it's really just the way the bars are unfolding. If it looks like they're unfolding quickly, there seems to be a lot of buying going on. And during the overnight, let's see, these all developed over the span of about 20 or 30 minutes. So it would have been a nice steady progression. I would have considered there to be a reasonable amount of downside momentum there. Yeah, see, they're struggling again. If they can break the high, we should see some follow through, because at the moment it appears as though we're moving a little bit sideways. Therefore, there's going to be selling near the top, buying support near the bottom. All these sellers who are at the top here need to place their stop loss somewhere, right? So many of them are going to place their stop losses above this level here. Certainly these traders are going to be placing their stop losses in this neighborhood. Therefore, if we can see prices tick above 47.72 or thereabouts, we should see the market momentum increase, because all these sellers who have been selling here are likely to exit their orders. How do I know that? Well, look at what we're doing. We're trying to buy, and where is our stop loss? That's right, it's down here, along with all the rest of the buyers. The rest of the buyers have their stop losses down here as well, down here. There'll be some that have their stop losses here, but not many. Most, because the range is relatively small, most are going to try to risk the trade at least to the bottom of this trading zone. Let's make sure we're below the low. Now what concerns me is this very much has the shape of a really big bear flag also. Right? A bear flag, for those of you unfamiliar with the term, in a downtrend we get these little pullbacks where the market retreats in this rather tight little channel formation before the next move lower. In a uptrending market, the opposite is true, where you get the market retreating in this little pullback channel type formation before the next breakout higher. Yes, so now we're getting a first micro-macro cross lower. Just need to try to be patient. Now, normally when the market is like this, when you open up and the chart seems to be going sideways, I would not necessarily load up the way I've done here. I wouldn't necessarily take the Hawk trade, the Falcon trade, and the Raptor trade. I would do one of them, but I wouldn't necessarily do all three. I never feel very confident doing a counter trend trade. Alright, they're going to try something here. I'm considering rolling my stops in below this little swing point that we have here. Crude oil still very, very sideways. Tight little trading range for crude. Oh yes, Suncom's asking about the pop-up on the NinjaTrader about the rollover for the index markets. You're noticing that I'm still trading September, and the rollover suggests you need to roll over into the December contract. I don't know why Ninja gets you to roll a week early. The September contract is actually still good until next Friday. But we'll let this position close out, and then I'll show you how to do your rollover if you haven't done it already. Well, we definitely need to see some buying come into the market here, or we're going to get tagged in a moment. We did produce a couple sell signals, by the way, so our buying signals have since been negated. We've got a double pullback here on the Raptor. So here's pullback 1 and the subsequent signal. Pullback 2 and the sell signal. see the buyers dig in, or are the sellers just going to push it lower still? Remember, whenever you encounter a trading range like this, the safest plan of action is always to allow the market to break out of the range. And just identify, okay, we're in a trading range. That's how it is. If the range is large enough, you can try to buy the bottom end and sell the top end. That's what everybody's trying to do. See, notice the buying came in here at the bottom. We're getting a reaction on this bar. I would not recommend you try to hang on for a long time, however. If you buy down here, just take your scalping target. On the NASDAQ, that would be $50. If you get $100, that's fantastic. Anything over $50 would be a bonus. But you should not attach too much predictive value to this move. You should just look to do a little buy, look for a little uptick, try to take advantage of the rest of the buying that's going on down here, because sooner or later you're going to get a breakout. When that breakout happens, the buying will resume, but a little bit further down, of course. And then when that buying resumes, you're going to look for the sellers to prove that they can hold that breakout. So this is the safer trade. Let the market break out of the range, let it retest, and then let it come back with a signal. Tony says the mid-cap's behaving nicely. Maybe I ought to be taking a look at the mid-cap because the NASDAQ is just toying with me. Well, we have a very, very neutral market. As you can see, out of the open, we got a little bit of a rally. 20 half hour later, we're back down where we started from. So very, very tight little sideways range today. In all honesty, I've mentioned this before. I don't usually watch the market open. In fact, we were going to start the trading room around 7 o'clock, but so many people wouldn't understand why you weren't there for the market open that we started it at the market open. The reason I avoid it right out of the gate is I don't want to take obviously I don't want to take a bad trade, but a lot of times out of the open, it's hard to gauge what the market's going to do because it hasn't done anything yet. Thanks, Keith. Keith says wholesale inventories at the top of the hour. So that information should be hitting the floor shortly. We'll see if it sparks the market one way or the other. Right now, things, of course, looking a lot more bearish as we're at the bottom end of the trading range. I would dearly love to see a little bit of a bullish uptick here, another set of yellow bars. That would make it a little bit easier to start rolling my stops. Yellow bars, of course, here on the hawk. Oh, interesting. Um, Mike mentions regarding the rollover that normally will default to the December contract, but it's still showing September. So he says maybe we need to wait until Monday for it to do the proper rollover. There's still plenty of volume in both contracts. Of course, now more and more volume shifting into the December contract. I noticed that the other day, though, Mike, when I went to attempt a rollover. Yes, I know. Suncom says he says no, Eric. The message said to change contract end date to yesterday, September the 8th, for 4 contracts: the E-mini, the Nasdaq, the YM, and the Russell. Not exactly sure why. No, I'm not exactly sure why either. They've programmed it to suggest you roll over a week before contract expiration. I suppose because if they told you next Thursday and you didn't do it, you could potentially find yourself trading a contract on expiration day. And as a result, they've decided to tell you about it a week early. But if you check the exchange, you'll see that the Nasdaq September contract, along with the E-mini, the Dow, and the Russell, do not expire until the 17th of this month. And so Suncom sent me the NinjaTrader page that is associated with the rollover. And yes, I know they're saying the Nasdaq, the E-mini, the Russell, and the Dow are expiring the September contract. See, September contract expires, actually it's next Friday, but they've marked here Thursday. And so they want you to roll into the December contract. And after this trade closes out, I suspect we're going to see it attempt to violate the lows here. But after this trade closes out, I will show you how that is done, all right? Yeah, Gary Gary says, talk about a roller coaster ride. A very, very slow roller coaster. The kind of roller coaster I like. But not so much when you're trading. Next, oh, actually this weekend is the Cowichan exhibition. We live here in the Cowichan Valley on Vancouver Island. And it's the time when the Midway is in town and all the amusement park rides, and the farmers get together and they do their tractor pulls and show off their livestock and this and the other thing. Well, our grandson, who just turned 9 yesterday, loves the Midway. He loves the amusement park rides. I swear that kid is like a fighter pilot. You cannot make him sick. And I've never really had a stomach for amusement park rides. Thank goodness his mother can tolerate the rides, because I think he would take me on those rides just to see me vomit afterwards. Well, they keep trying. Notice here all the volume that's going through these bars on the lows. A fair amount of volume here out of the open, but really serious volume here. Oh, they're going to try it. They're going to try it. Somebody's going to dip their toe in the water just below the low. And now watch the buying come back. All right, well, we got stopped out on that. That's part of the reason I only went in with single contracts, because it was early, because the market really didn't have much direction yet. Yeah, thanks, Stephen. No. Stephen says, give me your grandson's address. I want to pay him to take you on the rides. No. We're still sideways, still hunting for a direction, if we're going to get one today. The whole day may just end up being sideways. What I would love to see, now this would be a better probability trade, is if we saw a reaction higher now. So let's go here just to the Raptor for the sake of convenience. So if we get a reaction up, and maybe even an early buy signal, maybe a couple ticks or a couple bars higher, a quick little retest of the low and a failure, and perhaps the market comes up here and produces a buy signal, that would be a nice little soft edge buy. That's a trade that you could take with a great deal of confidence. I thought that's what we were doing here, what we were going to see here when we did the soft edge buy. Right, so the market comes down, goes up, gives us the retest of the low, comes back with a soft edge buy signal. That tends to be a high probability signal, and we anticipate the market to move to the hard edge. However, it did not. Now, it remains to be seen whether my stop was just a little bit too tight. This is always the challenge when you're placing your trades, to keep your stops out of harm's way. Remember, it's not a stop out if it doesn't get hit. It's not a loss if it doesn't get hit. I know, it seems very straightforward, and yet people always ending up putting their stops in rather tight. Oh, I said I was going to show you how to roll contracts. All right, so here we go to our control panel. And what you will do is you go to your instrument manager. Now, normally when it's time to roll over, all you need to do is you need to click on the contract in question, and then click this arrow, and then click that arrow, and it will back the most recent contract month. Let's see if I can find one here that's near expiration. Well, here's, no, that one I just rolled. Let's see if sugar is ready to roll yet. No, sugar is still in October. All right, well, let's do the E-mini. Oh, no, sorry, I've got a E-mini trade going. Let's do the YM. Okay, so I push it over. You can see the Globex still recommending the September contract. But if I want to roll to December, I can choose December from the drop-down menu. So now I've selected the YM, and I know it's the YM because I've clicked it to move it back. So now I've selected the December contract, and I'll move the YM back, and you see I now have December YM right there. What about natural gas? No, it's still the current month. Crude oil? No, it's still October. But usually it's that simple. Here's feeder cattle. No, they're October as well. So really, most times all you end up doing is, as I mentioned, you click you right click. Oh, here we go. Okay, so there's silver. That was, I think, well, I forget what contract month it was. I think September. So I right clicked, and all of a sudden it prompts me to move to December silver. So I click over, and now I have December silver in the assortment. Now, like I said, you can make it move over to the December contract. And you can even choose it this way. You can go NASDAQ. It will always give you the current month down here, or the front month, and you can find December, and then you can move it into your assortment. All right, so that's how that's done. And doggone it if they didn't just tag me by a tick or two. Oh, I missed Tony's comment earlier. Tony mentioned a potential 4-arrow consolidation pattern. Yes, it certainly was. The problem was the trading range again. Right? If you're taking a signal near the bottom end of the trading range, What's the problem with that? Well, this is where all the buying occurs. This is where all the selling occurs. Ideally, you don't want to sell down here, you want to sell up here. So if you're going to take this four-arrow consolidation, it's not to say the market can't reach its profit objective, but maybe we're not going to go in for the full amount. Maybe we're going to dial down the risk a little bit, maybe just throw a onesie on it, see what happens. As it turns out, it did hit its profit objective before putting in a rather substantial reversal. All right, so here comes the first micro-macro cross signal. As you can tell, I'm still anticipating a move higher here today. We're near the top end of the trading range, not quite at it yet. Top end up here. There's selling going on here, which is why I've delayed my entry until we get above the high of this bar. Not sure the buyers are actually going to muster a rally. Here's another little tip. Whenever you see a market that has a very, very strong rally, the temptation is always to think that the market's going to rally back the other way, and very often it does. But sometimes the best the buyers can do in this instance is just move the market sideways. The sellers are just too strong. There's a lot of selling pressure here. There's a whole lot of selling. And right now we're just seeing little itty-bitty bits of buying. So it's one thing, to go in with a single contract and see what they got, if anything. See, now that rally was short-lived. Our macro pullback coming back rather a substantial distance. I'm going to try to turn this one into a runner. And I'm going to dial down the risk. Just going to take a onesie on it. All right, so remember here on the Raptor how I was saying I'd love to see a few bars come up, a little bit of a retrace, and then a possible buy signal. Well, we've got our push up. Here comes the retrace. We're retesting the lows now. We're looking for the sellers to regain control of the market. And if they fail and we come back with a buy signal, there's a very good chance that we can expect the buyers to try to rally the market. Now, again, it's probably not going to be a full-on reversal, but, certainly here to the hard edge. Where are we on the support and resistance suite? 47.78 seems like a reasonable objective. And after that, we're into the primary support at 47.87. That might be a little ambitious right now, but I could see a move to 47.78 as the buyers try to get something going. Right, here comes that retest. This now into yellow bars, our hawk signal. So we're going to cancel that. The yellow bars, of course, a no-no on the hawk. It's okay on the other tools, but not on the hawk. Too indecisive. Wow, everybody's sideways. Crude oil. Soybeans actually waffling also, but much larger ranges here on soybeans. Big swing up, big swing down. Now is another big swing up. Doesn't look like much on the Eagle, but larger swings on the other tools. Oops, what happened there? Sorry. Hold on, it's coming. I must have clicked something wrong. Well, it's not much going on here right now. All we can do is wait it out. Yes, we're getting warmer here on the Raptor. Haven't produced a buy signal yet. We just did a trend change signal here on the Falcon. Now, I know a lot of times you're looking for a trade to follow me in on. If you're going to try this, you know, you just want to go in light. Oh, there's the buy signal on the Raptor. So this is now our soft edge buy, and we're going to try this again after getting tagged for a couple of ticks on the downside, looking for a little bit more follow through. Come on. Oh, it keeps trying to roll my stop here early. I'm going to hold it back just a little. All right, the seller's trying to push it back a little, but oh, come on. Well, you know, like I said, best thing to do is just let it break out. Let it get outside this range. I know it's boring, and I show you some trades here because otherwise we would have nothing to do. But let it break out. Let it give you a signal. Let it break out. Stay out. Give you a signal. That's the only way you're going to avoid this sidewaysness. Other than that, you keep your stops deeper and just try to ride out the swing or the range. it will break eventually, one way or the other. And the longer it keeps going sideways, the less influence this overnight move is going to have on the market. All right, here we go. Are we actually going to see the buyers follow through this time? Come on, don't stop now. Well, it's rare that we see a market as sideways as this one for this long, but there you are. Well, I can't believe it. They're going to come back here. They're going to retest the low. And they're going to try to tag the stop again. Like I said, that's just the kind of day it's been. Let's see, maybe we caught a lucky break this time. Nope. Maybe not. Oh, that's crazy kind of day today. Well, it does appear as though we may finally have seen a breakout through the bottom end of this trading range. Oh, way to go, Tony. Tony says he's following the mid cap. That's the EMD. That's the symbol for that, for those of you interested in it. He says, I got the combo. First micro macro cross and the macro pullback. Well, now that we've finally, after an hour and 10 minutes, seen a breakout outside of this trading range, we may actually see some sort of opportunity develop. All right, that was the first micro macro cross lower when that breakout came, but looking for the retest now, right? So we got the breakout. Here comes the buying, looking for the retest. Now we're taking our time on the retest. Wow. Well, we'll give them a few more minutes here, and after that, if they don't smarten up, I think we're going to call it a day. Tony asked Eric if it gets slow again. It doesn't get much slower than this. How does the auto trade log work? Now, I think you're talking about the one from, hold on a second here, let me get the indicator warehouse site. Yes, for journaling. That's the one. All right, let's see if I can find it so everybody knows what we're talking about. It's called Trader View. Just trying to find it. 1 second. There it is. Okay. All right, so at the indicator warehouse site, under premium indicators, there's this tool called the Trader View. Trader View Online Trading Journal Connector. And what it does is it syncs your NinjaTrader trades with the Trader View online trading journal. So let's go to Trader View. Now, I believe they still have a trial period. And it's actually set up more for stock traders, but they do have a futures option as well. And what it does is every time you take a trade on your NinjaTrader, this tool, this plugin, will submit your trades to the TraderView journal. And what it does is it will, so you've got the auto import feature. it will allow you to do analysis of your trades. So you'll be able to do these performance reports and see, what your P&L is, your profit line, your equity curve. Now that's all very useful information, and it's a very interesting little tool. If you use it. Personally, and I'm not knocking TraderView, please, for those of you who are subscribing to TraderView services, don't think that I'm knocking what they're doing. I'm not. But for me personally, I think you get more out of your journaling by keeping a handwritten journal. It doesn't have to be anything fancy. I really should update this for those of you who haven't seen it before. I'll show you really quick. This is a page from my journal from like 4 years ago now. And you can see it's just a spiral bound notebook. And at the time I kept some very rudimentary information. I've since also included profit objectives and other things, but I very rarely consult my journal. However, the mere act of writing things down somehow imprints it on your brain. And after a very short time, we're talking a week, maybe 2, you're going to start to see patterns developing. So even though this journal is from 4 years ago, I can still tell you exactly what was going on with each of these trades. I can tell you exactly what I learned because I tend to highlight it with a star or a lot of exclamation points. And by following it, you'll come up with things like, this is how we got the first micro-macro crossover. For instance, this sell signal here at 707 on the NASDAQ, it was a signal on the hawk. I sold 2 contracts at 26.12. I took profit at 26.09 half, $100 profit. It was a first micro-macro cross after a failed buy attempt. So the market was in a downtrend. So we obviously had a market that was in a downtrend. They tried to rally the market up. Okay, well, not as good an example, but we have a market that's in a downtrend. They tried to rally the market up, and then we came back with let's pretend that we got a first micro-macro cross lower printing right here. That's essentially what the signal was. So downtrend, failed buy, first micro-macro cross lower. I took that trade, and it worked out. Like I said, it's not that I consult the journal. It's not like I sit down at the end of the week and flip through my journal, although you certainly could. But the mere fact that you're writing these things down, like I said, somehow it imprints it on your memory. And you learn from it. You spot things. And your investment really is just time. Right? It's especially this time of the year. You pick up these notebooks at Walmart for $1 each. It's not like it's expensive, but will you commit the time to doing it? And it doesn't take a lot of time to jot these down. You can see this must have been during one of the profit runs, because I don't normally take 5 trades in the span of about 20 minutes. This must have been during the profit run. So I was, taking a lot of signals, a lot of trades. And the important thing is, if you have a losing trade, figure out try to figure out what went wrong. What did you miss? Because if you step back from that trade a little bit, there's probably something that was gnawing at you saying, oh, I shouldn't have taken that trade. Like, for instance, this morning, every single trade that we took, I would not take. I showed them to you because, well, there was nothing going on. But really, now I'm interested, now that the market's broken through this trading range, show me the retest, come back with a signal, and then I'll give it a go. That's going to be my high probability trade. We tried 2 counter trend trades this morning. Both of them failed. The market is just too sideways, but now we've got a bearish break. So had I taken, had I taken this signal, I probably would have taken this signal. That's not fair. I shouldn't say that. This signal right here, this second attempt to rally the market, I would have taken that. There's something you won't hear from other trading room moderators. A moderator who actually says he made a mistake. This was a solid signal, though. There was every reason to expect the market to continue to rally. And obviously, we weren't the only ones, because the market did rally for a few bars. We got, what, maybe 5-10 ticks out of that before the reversal. So had I scalped, I could have scalped out with a profit. See, that's something I'm going to write in my journal, is the market is sideways. Why wasn't I scalping? You know the market's not going to follow through. Why are you trying to run out a contract? Well, because I'm trying to look like a rock star, right? I'm thinking, ooh, maybe the market's going to hit a real big trend, and I'll rack up a big number. No, the market's sideways. Recognize the market is sideways. Go in, scalp out, take your money, look for the next trade. Both these signals, by the way, were profitable scalps. That one was, and this one was. The double pullback was a profitable scalp. All right, so there's something I'm going to make note of in my trading journal. Something you think I would have learned after all these years, but obviously not. When the market's moving sideways, recognize it's moving sideways and scalp. Just take the small profit when you have it. This double pullback also would have been profitable. And this one actually would have had some follow through to it, which would have been nice. But there you go. There's a little lesson. Probably a good note to end the session on. I don't think we're going to see too much more here this morning, folks. It's going to be a long time until we get that retest. I don't even know if we're going to get another signal this afternoon. The market's just plodding along so slow. I think we're going to wrap things up here. And I'm going to wish you a pleasant weekend. And we will see you again on Monday. And hopefully the market will start to get some of its normal activity going on. All right, we'll talk to you on Monday then. Bye for now.